Welcome back. We're back with another video, and in today's video we're going to be talking about a very simple entry model which you can use whether it be swing trading or scalping. So intraday trading for those who day trade. Right, so I'm going to try to keep this simple so that you guys can understand it better. And the first example I'm going to use, I mean, if you've been following the channel, you must have some knowledge on supply and demand. Right, so this entry model is very simple. Remember, we look to enter these trades as reversal points at our peaks. All right, so I'm going to give you a buy model that you could look for. I mean, if we are in a downtrend, right, where we can identify lower lows and price reaches a demand area, right? So if we continue pushing down, the moment price reaches this demand area and rejects, what we want to see is a break of structure. All right, we want to see a break of structure at this level here, and then we can proceed to look for entry to the downside. All right, so that we can catch this buy. All right, so keyword is the market structure. All right, this is the basic model. Basically, this is the very basic model. But what usually happens, and I mean, these are very powerful trades if you actually back test, so you can see it for yourself. All right, let me just draw an example. Okay, so if price reaches a demand area as it's pushing down, your lows, right, what usually happens is if price goes up, breaking structure, right, we want to see a move back to the downside, back to this demand area, right? Because remember, orders have to be filled at that area right there, right? So what usually happens is the dealer will try by all means to induce retail traders into taking trades and then trapping them, right? So this is what usually happens. As you can see, we want to see price get back to this demand area, all right? But what usually happen is, for those who trade support and resistance, they'll be drawing lines, and whatever strategy they're using. But what the dealer can do right here is he'll give you something like this, right? As you can see, this is support 1, support 2, and this area is also a very good area because of the confluence, right? As you can see, we've got a head and shoulders type pattern, right? Some call it the QML, some call it the Quasimodo, or whatever you call it, but it's the same thing. So we want price to come down here. What will happen here is you're going to be induced into taking buys, right? And the moment we take buys, it's pretty much very simple. When it comes to placing our stop loss, the only area where we would want to play around is below this area, right? So this area becomes an area where there's a bunch of stop losses, right? And remember, the dealer's job is to hit your stops, right? So what usually happens is when price gives you this, it will then push down, get into the demand area, and then it shoots off, right? These are other factors of confluence you can look for, especially if you're trying to take trades with good risk to reward. So I actually saw some example on GBPUSD, something that actually happened. Was it this week? Yes. Right, but let's just look at this from the weekly, because I like understanding the bigger picture always. So currently, this is what we have in the weekly. Price has been pushing up, right? Price has been pushing up because of this demand area right here. Right, that's the demand area, important. But I also want you to notice something. When price pushed down into this demand area, look at what happened here. Right, these are areas where retail traders got pending orders for sales, right, as soon as that low gets broken, right? But what was happening here is price just went into the demand zone and took off. So if we go to the shorter time frames as well, it will actually start making sense. Okay, this is what we have. But for those who count levels, I mean, this is also a nice um, way to actually, count your levels in the right way. So as you can see what we have here, we've got a peak formation, and we can identify level 1 into a consolidation, level 2 into a consolidation, and level 3. So you can see market was pushing up. So the area I'm talking about is this area. Let's go down to the shorter time frames. I think we can use the 2-hour time frame. I want you to see something. Right? Okay, I think we'll go to the H4, because remember, the demand has to be clear to see. Right, it has to be very clear to see. So this is what we had here. Right, our demand area is actually down here. There we go. Right, as you can see, price was playing around this supply zone right here. But as price started pushing down, you can see what was happening. Right, liquidity was being taken. Right, as price was pushing down, and these are areas where retail traders have, their stop losses. Right, when they see such, and as you can see, you're always being induced as price keeps making these pullbacks. But what basically happened here is we can identify the support 1, support 2, and a move below. So this is what we call a fake out, right? Or this becomes our fake out zone, and then this becomes the hitting of the stop losses, and also the collection of orders right there. So this type of trading can actually keep make you consistent if you just focus on this, because it will always happen in the market. Right, it repeats itself over and over again. I mean, look at this. We've got this supply area, price went down. Right, price gave us a resistance, and price just went above it. Right, that's a fake out, right? And this happened at a supply area, so the risk to reward is good, because I mean your stop loss is just above, and you can also target these lows right here. So that was actually a nice one as well. GBPUSD, and I'm also looking at CAT JPY. Kinda looks good from the higher time frames as well. If you look at the daily, this is what we have. So price is actually back at a supply area. So I'd want to see this actually push down, right? If structure remains bearish as I'd want it to be. But remember, I don't control the market, so we'll just wait and always wait for confirmation. But I mean, if you're somebody who scalps, I mean, these are good areas. These are good areas, right? To just take sales if you want to be a day trader. So this works on everything. This works on everything. You will find these patterns, right? I mean, this is gold. Such, right? S1, S2, a trap below, but that trap actually gets into a demand area. Right, let's look at it from the H4. There, as you can see, we've got, let me just send this back. Let me remove it. Yeah, so this becomes our demand area, the fresh demand area, because as you can see, well, you can see with the wick action around that area, these wicks right around that area. But this is what happened: S1, S2, to induce traders, right? So this below becomes the fake out zone, and this is where there's a bunch of stop losses placed. As you can see, price pushed up. After pushing up, price then went down, gave a peak, and started moving away. Right? You always find this type of behavior, and I like it because when it moves, the market actually it moves. Right? It moves. You don't have to sit for days, for weeks, looking after a trade. No, right? You can actually get some very good trades, and with the proper risk management, you'll be profitable.